Hi there, welcome to Kneppy Invest and welcome to August 20, 2025. Time is currently 2:56 p.m. It's about an hour and 4 minutes left of trading today on a fairly interesting day, fairly busy day as well. Plenty of results were released this morning, and I had a plethora of companies to choose from to put into the top 5 stocks of the day. So we'll talk about that in a second. But first, we'll have a look at the ASX today, have a look at the best and worst performing sectors, indices, and also companies. I have a feeling that the best performing companies is going to be full of banks, maybe banks. And then we'll have a look at the top 5 stocks of the day. The companies coming in number 1 and number 2, I thought were fairly obvious based off the share price movement on results, and it was not good movement, the sort of movement you don't want to see as a shareholder. And the rest of the companies in the top 5, well, bad day for one of them, but a really good day for a small cap company on the ASX on the release of their results. Share price up about 30%. And that can be the benefits of owning small caps, is when they do surprise the market, share price can take off. Another company in the top 5 is a company I'm trading. I'm really looking forward to this results just to see if I maintain a trading hold or trading position in this company. And just bias, my own personal biases, is why that company is in the top 5. However, share price up about 4%. I will mention quite a few other companies that did release results today, but just quickly, in fact, in the chart of the day section, I'm going to look at 4 companies. And then I'll also mention about 8 other companies that I thought had interesting results. Okay, so let's get stuck into today's video. And the first thing I'm going to do is have a look at the ASX today. Yeah, and you can see ASX 200 up 0.26%, but a pretty bad day for small caps, tech, and resources. I'm assuming, and this could be a really bad assumption, I'm assuming, yeah, financials is up, real estate, pretty good day, discretionary, pretty good day. I'm assuming in ASX 200 banks up 1.91%. I am assuming that maybe there's been a bit of rotation out of CSL into the banks. I did read an article on Motley Fool yesterday that investors on the ASX were transitioning or moving their funds from the banks into CSL. And I think yesterday put a bit of scare into them, and now they're going back to the safety of the banks. Going back to the safety of the banks, because the bank share price don't fall 15% in one day. Now, in saying that, I still would prefer CSL over the banks, but CSL results yesterday did raise some red flags. But I'm wondering if that is happening today, because banks are up a fair bit. A good day for real estate. Don't know why, although Stockland Group did release some good results today. Let's have a look at that. And discretionary. Why is discretionary up? Don't know. Let's have a look. So let's have a look at real estate. Maybe Goodman Group is up as well, because that is by far the biggest company in this sector. But yeah, there is Stockland Group up 8%. Probably deserves to be in the top 5 stock for a company like that. But yeah, pretty good day for real estate on the back of Stockland. To be honest with you, I don't really care about Stockland, but maybe I should be caring. And for discretionary, what's happening here? Why is this doing well today? Let's have a look-see. Oh, the Lottery Corporation. I'm not going to discuss Lottery Corporation. Oh, no, that's in my chart of the day section. Oh, I am a little bit surprised. I had a look at the results and I didn't like them. But again, I don't follow the company too closely, but maybe it was just some good outlook. So it does look like Lottery Corporation, Wesfarmers, has led discretionary higher today. Okay, onto the ASX 20, up 0.84%, most likely the banks. I'm wondering iron ore, and we can see small caps, tech, and mining have had a bad day. So more than likely my portfolio has had a pretty bad day as well, because I do like small caps, tech, not so much mining. So let's have a look at the ASX 20. And at the top of this list, I would be shocked if we don't see banks, lots of banks. Let's have a look. NAB, Westpac, Transurban released results today. Not the sort of company I like all that much, but definitely NAB and Westpac a pretty good day. ANZ also pretty good, and CBA up by less than 1%. And quite a few of these companies, I'd say, are mature, low growth, mature companies. They've had a good day. Anyway, on the worst performing list, we have CSL again, although it was down 6% in the morning. So we have seen a little bit of support come in. We have seen some buying. So maybe that is a bit of good news. Could be like a buy the dip situation or a dead cat bounce. And negative day for also iron ore companies and REA Group and Wise Tech, which sort of makes sense with tech having a bad day. Okay, now on to the top gainers. And then we'll have a look at the top losers. Top gainers today include a company called Papyrus. Papyrus. How do you pronounce that? I have no idea. Papyrus. Australia up 220%. When I say that, I have to talk about Avanti had something wrong with something a while back, and their share price is up. Don't care. Etherstack is in my top 5. This is a small cap company. Market cap is 80.95 million, up 30% on their results. I didn't realize the market was going to love it that much, but I thought it was pretty good. Lynch Group is up on a takeover bid. They also released results. And then HMC Capital, a really bad day. Was it yesterday or the day before? I think it was yesterday. A pretty bad day yesterday. And then there was a positive report from someone recommending him, and the share price is now up 15.6%. So is the share price now back to where it started for HMC Capital? So just imagine that. People now buying on this broker upgrade, and they could have got in much lower yesterday. Just shows you the silliness of investors. And they could have gone in yesterday at $3.13, and they're buying happily now at $3.84 just because someone recommended it. Anyway, so share price down 6.5% to yesterday, up 17.4%. So it just shows you that the power of the brokers or recommendations can have is much more powerful than results sometimes, which is ridiculous. It's ridiculous. The whole reason I knew that is because HMC Capital shares rebound as Morgan's upgrade stock to buy. Yep, the insanity of the Australian investor. The insanity of the Australian investor, indeed. Let's have a look at the chart for this one. The Australian investor says, oh, look, this company likes this other company, or this broker likes this company. I'm going to buy because they're recommending. I'm going to buy. Anyway, the chart still does not look good. Chart does not look good. But yesterday's chart was pretty negative because it broke down below a support level, and now it's back up. So anyway, the insanity of the ASX investor, relying on other people to make decisions for him. Okay, what else do we have here? I think that's about it. Yeah, that's about it. We'll briefly discuss Papyrus, PPY. Papyrus, I don't know, I have no idea. Stockland Group, Lottery Corporation, Magellan Financial Group. That I'll discuss that company in my charts of the day. And Service Stream had a pretty good day as well. SRG Global had a pretty good day yesterday. Was it yesterday on results? Energy One up 8.11%. Their results were good, but market cap is 472 million, profit of 5 million. So P ratio is still just below 100, a little bit overvalued for me right now. And Shape Australia, which is the company I want to discuss, well, it's in the top 5. That is the company I'm trading, looking up for their results, because this is one of my longest trades right now, but the share price just keeps on going up. And then Lynch Group. So let's have a look at this Papyrus. That sounds good. Papyrus, Australia are fairly small company. Share price up 230%. They're only trading hot right now. Interesting enough, they signed an agreement, offtake agreement with Aquirin, which is another ASX company. And Aquirin AQN chart looks really good right now. So a lot of interest in that company. So biodegradable collar keeper term sheet executed with Aquirin. And this is from the Quirin side. I wonder if we should look at it from the Papyrus side. Here we go. So 2 announcements separately released. Binding sheet, $4.2 million total contract value. I think this was revenue value. This was over 3 years. Yeah, 3 years with a 3-year option to extend, 4.2 million. Now, I'm pretty sure Papyrus doesn't sell anything. I'm pretty sure because on occasion I do have a look at their cash flow report, and I'm pretty sure there was nothing in it. Nothing. This is more, there's nothing's happening with this company. So maybe this is sort of like some sort of validation of what they're trying to do. Otherwise, I have no idea what this company does. No idea. About Aquarian, about Papyrus. Innovative company providing sustainable solution using its patent technology to process agricultural wastes, currently focused on banana plantations into high-quality alternatives to wood-based, paper-based, and plastic-based products. Company's process eliminates the need for harmful chemicals and produces a range of eco-friendly materials and packaging. That's fantastic. Fantastic, but it still has to be economical. Anyway, so let's have a look. I'll go back because they're in trading halt right now. So the share price went up 230% on release of this news. Then they went into a trading halt at 10:57 a.m. And I was like, why are they in a triangle just after they released a really powerful? It can't be an ASX price query because they released an announcement. Anyway, this is some sort of clarification on this announcement, it looks like. So they just mentioned here that they are pending a supplementary announcement to be made regarding the announcement released to the market that they released this morning. What this supplementary material is, don't know, but the market likes it. Well, the first announcement. Maybe they won't like this supplementary material. So anything to like with Papyrus Australia? And well, this does. Oh, share price did get to like 5.1 cents. So that means the share price was probably up almost 400%. That's even 500%. That's insanity. Again, it just shows you maybe there's a little bit of froth in the Australian market when stuff like this happens, and you see the share price rise 500% on a little bit of news. But otherwise, the chart has been looking horrible. This could have been a nice little breakout for the company, but I do prefer it to be on more solid, more powerful news. Okay, now onto the top losers. And top losers. Okay, Beam Communication. I was going to talk about this, but it's on fairly low turnover. They did release something this morning. I didn't have a quick look at it, but they did sell the Zolio, whatever it's called, and they're getting money back from that. So I'm assuming that this was disappointing to the market, how much they're getting back. So Beam Communications, so I am talking about the company right now, or this announcement right now. So this will be the company, the top loser I'm going to talk about. So Zolio Inc. final valuation intention for capital return. I'm assuming that this was a disappointing outcome for the company. So total amount payable for Beam's exit is 14.6 million Australian dollars. And yeah, what else did they mention here? Yeah, and they're looking at doing a capital return. I'm not sure what the future of this company is otherwise. So I'm just assuming this was a bit of a disappointment to the market. Let's have a look at the chart for Beam. Beam Communications, and yeah, the share price actually did rally a fair bit yesterday. 20%, now it's down. Was the capital raise, was the capital return, is the capital return date today? I didn't see any dates. I'd be shocked if it was, because they'd have to talk about it. Yeah, not yet. Not yet. Okay, so let's move on to the rest of the top losers. James Hardie, stock of the day, with a bullet. Originally, stock of the day was going to be step one, because share price down by a fair bit. And I completely missed James Hardie announcement. In fact, it was the first announcement of the day, and somehow I missed it. There was two announcements I missed: James Hardie and Aluka, and then I realised that James Hardie did release their results, and share price down a significant amount. And it's really interesting because the chart was looking interesting for James Hardie. And at the start of the week, I always write down charts of companies that I think are looking interesting, and James Hardie was on that list. So very thankful that I did not buy any shares in James Hardie. But you know, no thinking needed, no thought needed for stock of the day, James Hardie, and company coming number two, step one. Look at those share price declines. Other than that, nothing much else to talk about in the top five, in the top losers, apart from Retail Food Group, also in my top five because share price is down 15%. And because I had a lot to choose from, how I chose the companies is how the market reacted to their results. And Retail Food Group down a fair bit. Virdis Mining and Minerals, they did release something today, didn't they? Or was it yesterday? It was today. Colossus delivers outstanding 200 megaton maiden ore reserve. The market doesn't like that. Share price down 13.57%. And let's have a look at the chart for this one. And this will be the company I'm talking about. This is my top loser of the day, apart from Beam. Now, gee, the share price has been on a beautiful run. Buy the dip situation? Up to you. I was going to discuss, as we turn our attention to top losers by market cap, I was going to discuss Yancoal, share price down 2.9%. We also see a fairly negative day for Pilbara. and really negative day for the drone sector, we'll call it. Drone Shield down 10%, Hyperion down 7.38%, which I'm not sure is drones. What else is it? Electro Optic Systems down 12.22%. Elsight down 13.53%. And I'm pretty sure Orbital is in a trading halt for a capital raising. And they're going, yes. Yeah, trading hot for a capital raising. Announced that yesterday. Good work, Orbital. Good work indeed. Now, I'm just going to briefly mention Yancoal because the share price is down by more than 10%. And that was sort of my cutoff. If any company share price was down by or up by 10% or more, that would be in the top 5 stocks. So Yancoal probably should be in the top 5 stocks. So let's just briefly discuss this one. Now, I don't really follow this company all too closely, but I did have a look, and they released results last night, only half-year results. I did have a look at their, was it this one? No, it wasn't that one. I did have a look at one of their, I'm trying to remember where it was. So obviously the numbers were a little bit more negative, or maybe even their guidance was a little bit more negative. But what I really liked was the acting CEO comments. This was what I found really fascinating. And I find this thing sort of pretty important for mining companies because mining is all about demand and supply dynamics. It's very cyclical. And sometimes just from commentary, you can get an idea that there is potential that the particular sector has hit the bottom of the cycle and maybe there's more potential for upside moving forward. Now, I do currently own a couple of coal companies just because of that, and I'm going to be patient. I'm going to be patient. I have them in my super. I'm just going to be patient because maybe this is the bottom of the cycle. So I was actually fairly interested to see what they're saying. So they just mentioned here, during the past 6 months, we observed elevated global supply and subdued demand. So again, supply demand in both thermal and metallurgical coal markets. And then they talk about, here we go. The last paragraph is something I'm a little bit more interested in. Some supply side responses to the lower coal prices are beginning to emerge, which aligns with our view that coal prices or coal indices are presently below marginal cost on the global cost curve. So this is what we want to see because there's been, quite a few years ago, coal prices were nice and high. So a rush to get coal on the market, and because of an increase in supply with same demand, coal prices drop, and coal prices drop enough that those high cost producers go, well, our mine isn't viable anymore. And they're the ones who caused these unviable mining conditions. So they say, well, it's unviable, so we have to pull production. And then you see decrease in supply, keeps on decreasing. Demand stays the same or fluctuates. And then finally, supply gets to the point where it's so far below demand that prices started to rise. Prices rise and rise and rise. Anyway, so that is what we are waiting for. And that's why they mentioned marginal cost on the global cost curve. So prices are below that. And that means a lot of these high cost producers, well, why would they be mining if they're losing money just by mining? Anyway, so we anticipate further supply side reductions from higher cost producers. Exactly what they said. Contributing to a potential recovery in coal price indices similar to previous coal price cycles. Such a price recovery could bolster our financial performance over the next 12 to 18 months. The question becomes, when is this going to happen? I just don't know. And that is why I prefer to be patient in these sort of situations. So I've just slightly adjusted how I tend to look at these sort of setups. I don't trade these anymore. This is more of a medium to longer term trade because cycles can last a fair while. And I do think you have to be patient. But I think possibly now is a time to have a look at some of these commodities and companies who are mining these commodities who are near the bottom of the cycle. So coal, lithium, those sort of companies. Yeah, that is what I found really interesting about Yancoal coal. That's it. Nothing else, really. Okay. Oh, by the way, share price down 10%. So let's have a look at the chart. And chart doesn't look at anything. I wonder if my 2 companies I am trading, how they're performing today. Although I don't really care all that much. Yep, that makes sense. Oh, really? It's down like 6 days in a row. And the other one was Coronado. Now this one, yeah, down 3%, but this one's a little bit different. This has been on a really good run. And I think it's just because the company was in a bit of a quagmire and looks like they've crawled themselves out of that quagmire. And that's why the share price has rallied. That's Coronado. Okay, I think that's it. Yep, I think that's it. Okay, on to the top 5 stocks of the day. Actually, no, before that, I'm just going to talk about, before we get to chart of the days, will be the last section, and I'll talk about APA Group, Southern Cross Electrical Engineering, Lalaurie Corporation, and Magellan. But I'm just going to briefly mention a few companies, and I'll do this via the charts. A few companies I thought released interesting announcements today. Hansen Technologies, their numbers were really good, but we saw a significant reaction from the market. Share price dropped all the way down to $5, currently $5.70. So a significant positive reaction from them. Well, initial really negative reaction, and then look at that, share price just plunged in the first 30 minutes of trading, fell to $5, and then massive amount of buying coming in, and the share price has leveled off. So this would have been the running for being one of the worst performing companies today. Share price definitely was lower than 10% down. So, well, would have been like 15% down. I'm a little bit surprised by that because I had a look at the numbers and I was like, oh, this is pretty good. This is pretty good. But again, I don't really follow this company all too closely. And again, maybe the numbers were not to expectations or any sort of outlook was disappointing. But when you see this sort of reaction, I've seen this in the past. When you see this sort of reaction, I'm trying to remember which company it was. When you see this sort of reaction, actually quite bullish. I think it was COSOL. I have a feeling it was COSOL. And well, COSOL's not on my list today, but the nice little reaction from their results. This company did release results today, but I have a feeling it was COSOL. No, it wasn't COSOL. There was a company that released results. Oh, it was Doug. It was Doug. Yes, now I do remember. So Doug Technology released results February 2024, and look what happened. Share price the previous day was $2.55. The day they released results, share price fell all the way down to $1.80. So it taught about a 30% decrease in share price. Share price then rallied all the way back up to $2.44. That's really bullish. And you can just see what happened. It was like people just sold on fear that the results were not good, and the rest of the market just said, hey, they're not bad. And the share price actually kept on going higher for the next 6 months until it reached its peak of 325, and then the sentiment shifted. Okay, so that's Doug, Hansen, COSOL. COSOL did release the results today. I thought they were okay, but nothing great. Superloop, there was a bit of a comment from SAF 99681 who says Superloop up big, then down big, all in the first half hour after results release. Seeing this a lot. So this is a company I'm trading, and yeah, the share price opened up higher and then dropped a lot and has recovered. So a lot of volatility in this company today. And look at that volatility in the first 30 minutes. The share price went from 355 to 275 and then actually bounced back. And I'll be honest with you, this is why I don't usually look at how the share price of a company has performed in the first 30 minutes, even hour, and then I come back to the computer and just see how the share price and the market has reacted. Because it's just, I wouldn't say panic, but it seems like there is a bit of panicking and overreacting on open. And we have seen that with Superloop. We saw that with Hansen, maybe. And I think there's a few other companies as well. The chart, I mean, this is not a trend killer, I think. It's just a bit of I don't know. ServiceStream, share price still in an uptrend. The results were okay. I'd like to see better revenue growth, however. So that's one thing I'll have against ServiceStream, but the chart is beautiful. What else do we have? Energy One, their results I thought were good, but it's just the valuation of this company. Share prices and the valuation of the company has gone up too much. Now, the profit did increase by 500%, but it was on a low base. And I think the profit was like 5 million. So now the market cap of the company, or the P ratio of the company, is more like 100 now, which is a little bit too rich for me. And I think the run has just been too good. I don't think there's going to be a similar run in the future for this company. Smart Parking. Oh, in fact, Roger Roger Dolan says, when you get a chance, have a look at McMahon, which I did have a look yesterday, and Smart Parking. Recent financial reports both look good. I liked both of them. On my quick glances, I liked both. And Smart Parking had there was a nice reaction from Smart Parking's results, although share price has pulled back. There you go. So if you have a look at the 1 minute data, yeah, share price opened much higher and then has shifted lower, which can be a negative sign, So that's Smart Parking. Emiko, this one, I don't really follow this company at all, but I still look at their results, and I thought these results were pretty good as well. And the chart looking okay. It's out of resistance. Bit of resistance right there. And it's pretty obvious why, hopefully. And the share price has struggled to get above that resistance, which is $1, which is a powerful level. $1 for Emiko Holdings. And we also have, I don't think this is going to be much, a company called Step Change, a recent listing on the ASX, very small company, but they're profitable. So I want to have a closer look at this company, but no reaction from the market. And the other one was, Stockland. Yeah, of course, Stockland. A pretty good reaction from their results. This chart probably looks really good. This is a trading setup. This looks like a really good trading setup, but I just don't know. These sort of companies, I just don't know. But this is the sort of setup I'm looking for. Okay, so that's some of the more notable results that were released today that I won't talk about when it comes to top 5 stocks or the chart of the day. So let's get into the top 5 stocks of the day, starting off with a bit of a biased one. Shape Australia, share price up 4.19%, so has fluctuated, has been up as much as, it looks like, has been up as much as 8%. Now, this company's chart looks amazing, and because I am trading it, it's a long-term trade, these results are very important, or any sort of outlook is very important. So, okay, so what do we have for this company? I actually did write down some of their numbers here, and they slightly beat their previous estimates. So they did release, the trading update. So they released a trading update on 23rd of June. So I just compared their numbers in this particular results to the trading update, and it was a slight beat. So they did have ranges. So for instance, revenue was a range between 950 and 960, and revenue was 956.9. But you might be saying, well, that's in their range. No, the midpoint. For me, the midpoint is their guidance. Anything above the midpoint is a beat. Anything below the midpoint is a miss. And the reason I do that is because when companies put their numbers into their models, valuation models, they put all the numbers into that model in the range. And now, and then it spits out a valuation, and the valuation is based off the midpoint number. So if that makes sense. So the way I look at this is anything above the midpoint is a slight beat. So they actually slightly beat revenue, slightly beat EBITDA, maybe not slightly. No, it's slightly beat. They're aiming between 32 and 33 million for EBITDA, and they got 32.7, and they're aiming for 20.5 to 21.5 in profit, and they got 21.1. So a slight beat. So I can definitely understand why the share price is higher. They also increased their backlog from 460 million to 492 million, and even their outlook was fairly positive. So, by the way, revenue up 14%, EBITDA up 26%, profit up 32%. So an increase in margins, dividends of 22.5%, up 32%. And my dividend yield now on my initial holding is getting to be really good. Really good. I've just noticed that. So I bought, sorry, I'm going to have a look at the chart now because I have not really thought about that. So I bought $1.86. So dividend, yeah, I'm well above 10% now. My dividend yield on my initial capital for Shape Australia. Wow, that's good. My dividend's going to be really nice. Really nice. Okay. Now, what else was I going to say? Oh, the outlook. Yeah, they had a nice little commentary when it comes to outlook. Here we go. Well positioned for continued success. 8% increase in backlog orders and a solid track record, blah, blah, blah. So this company is still quite performing well. It's nice. It's a nice company. Well, maybe not a long-term hold, but they're performing. And if they're continuing to perform, is there any reason to sell? And my answer to that is no at this stage, particularly when you look at this chart. Now, the share price had pulled back a little bit in July, and I was thinking, but that's just a little bit of a pullback. It's nothing substantial. I do have my sell price at 330, and I might raise that now to about there, so 364. Out there, which is the low on the 4th of August. That's it. That's how I do it. And the other thing is the share price got to a record high today. So a beautiful chart, no reason to be upset by Shape Australia at all. And this would be one of my longest trades. I'm going to have a look. My second longest trade after Stealth Group, but I have taken a bit of a profit with Stealth Group. So my second longest trade at this moment. So when did I buy this one? January 2024. So we're talking about 12, what's that, 20 months? 20 months. The ideal thing is a trade that lasts 5+ years, and that's when you know you're going to have significant returns. Okay, on to company coming in at number 4. We have the small company Etherstack. Etherstack. Share price up 31.91% on results. I wish I bought some shares in this one. Oh, okay, I wish I bought some shares in that Kali Resources. Are they back to trading? No, they're not. Etherstack. Okay, they release half-year results. This company has something to do with wireless technology. Something to do with wireless technology. And they have released a few deals with, here's one. Etherstack signs record deal with US giant AT&T. If I remember correctly, there wasn't much reaction from that. 11th of August. Or maybe it was up a little bit, but not much. And the share price actually was lower yesterday than what it reached that day. So even though there was initial positive reaction, the share price actually dropped after that. Anyway, so I suppose I wasn't looking forward to reading the results from this company. But whenever I see the share price of a company rise 30% on results, I'm going to have a look. Anyway, so let's have a quick look at we'll have a look at their presentation. Why not? They also release an AT&T presentation. So if they're signing deals with these pretty big telecommunications company, obviously they're doing something right. There we go. Wireless innovation. That's all I know they do. Something to do with wireless. They talk about mission critical PT&T technology solutions over my head. And then there we go. Wireless technology provider that supplies our own mission critical wireless networks to the public safety, utilities, and resource sector. 3 core businesses, blah, blah, blah. It's a small company, but they do have name dropping quite a few like AT&T, Samsung, Cisco, Nokia, NEC, New South Government of Home Affairs, Department of Defence in Australia, and Jersey Central Power and Light. Now, I've never heard of that. Lockheed Martin. Anyway, very small company. Revenue up 87%. Whoa. But only $6.1 million US. So it's a fairly small company. Record half. EBITDA up 42% to 2.54 million. A record deal with AT&T. And NPAT up 21% to 1.3 million US dollars. So again, a fairly small company in terms of revenue and profit. This company's been around for a while. I still remember looking at this company quite a few years ago. So the company hasn't really gained any traction. So maybe finally the company is gaining traction right now. Recurring revenue really starting to ramp up over the next few years after slowly increasing. So that is a pretty big ramp up over the next few years. And then talking about largest source of revenue, AT&T. So if they also Rio Tinto. So if they actually continue to sign some of the largest telcos in the world, this could be a significant growth story on the ASX. And then they go into the financials. Pretty nice margins, by the way. Gross profit margins up doubled from 33% to 64%. And they were loss-making last year, now to profit. So maybe this is the inflection point for this company. Maybe. And that is all I got for Etherstack. So let's have a look at chart. I think one of the reasons I first discovered this company, and you'll see it in the chart, the share price of Etherstack rose significantly maybe 4 or 5 years ago in one day. And this chart looks pretty good. This chart looks pretty good. I like this chart. There is a bit of liquidity issues, but beautiful looking chart. Share price at a long-term high. In fact, let's have a look at the weekly chart. Oh, there it is. You can see a massive spike in share price back in 2020. June 2020, share price went to 360. In fact, I'm going to have a look at why the share price rose that day. I still remember this, but I can't remember why. So share price rose 1,358% in one day. The next day, it dropped 40%, but it actually kept on rising that day. So share price more than doubled the next day before it started falling. You can see this was a little bit of FOMO, a little bit of too much froth in the market, sort of like we're seeing now in certain areas. But that announcement was on the 30th of June, 2020. By the way, this company has a market cap of 60 million, I'm believing, 60, 70 million maybe. 82 million, I was a little bit off. So 30th of June, 2020. Now, let's have a look at what this was. 30th of June, we're almost there. 30th of June, 2020. Okay, Samsung Global Teaming Agreement. Global Teaming Agreement with Samsung, RE 4G, 5G, public safety. It's the most boring sounding announcement, but the market liked it. Share price up 1,000%. Would this have got me interested? Absolutely not. There's no numbers here. It's just meh. And obviously, this was 5 years ago. So has this done anything for the company's success? Not really. After 5 years, not really. It's a big meh for me. In fact, do they even name drop Samsung? So this is sometimes why these sort of announcements don't do anything for me. Okay, but the chart looks pretty good. I don't mind this daily chart right now. Go back to it. Daily chart looks pretty good. Maybe this is it. Maybe now's the time to think about buying shares in this particular company. By the way, share price has increased sixfold in the past year. Has gone from 10 cents in July last year to 62 cents. Okay, coming in number, it's all bad news from here on in. Coming number 3, we have Retail Food Group, share price down 16.18%. I don't really care much about this company. They own food brands, I suppose, like not really restaurants. They own Brumby's Bakery, Crust Pizza, Donut King, and something else. I think they have offloaded a few. I do like to have a look at their presentation just to see how they've changed over the years. And they have acquired a few other food joints. Firehouse Subs, I've never heard of it. And Beefy's Pies, never heard of it. But they do have a nice little graph here somewhere or picture. Yeah, Gloria Jeans, that's what they own, yeah. So it seems like that is by far the biggest brand, Gloria Jeans, in 30 countries. What the hell? 634 trading donut outlets, Donut King. I'll be honest, I've never been to Gloria Jeans, never been to Donut King. I've never heard of Beefy's, 14 trading outlets in one country. I have been to Pizza Capers, but not Pizza Crust. They must have sold off Pizza Capers. 138 trading outlets of crust. Okay, so that's probably the only reason I like to have a look at this presentation, because it's got food. And we all like food. Who doesn't like food? Who doesn't like food? And I'm not sure about this Firehouse Subs. A 20-year agreement in Australia with 165 stores within 10 years. I'm not sure that's going to be... I've never heard of Firehouse Subs. Anyway, a few things about these results. What I found was I was trying to understand why the share price was down, and I didn't get any help from Capital Brief, or I didn't see any guidance from anywhere. I just had a look at the numbers. Underlying profit, 13.3 million. First half, it was 7.3 million. So the second half profit was a little bit lower in the first half. EBITDA, 29.6 million. The first half, it was 16 million. So EBITDA a little bit lower. But underlying profit and operating cash flow down on previous corresponding period, even though revenue was up. So let's just have a quick look at their results. An annual report to shareholders. Now, for those who don't know, haven't been long on the ASX, Retail Food Group about 10 to 15 years ago was a pretty big company, well liked, highly recommended by all those recommending sites you like. I'm pretty sure Motley Fool probably recommended them in quite a few of their platforms. and everything was going for him. And then something bad happened. I can't remember what happened because, again, I wasn't the biggest fan of this company, but something bad happened to Retail Food Group. I think it was some of their franchisees said they were being nasty or something like that. And share price collapsed. It was calamity. And I'm pretty sure they've sold off some of those brands, like Michelle's Patisserie or something like that. Now, what I'm going to do is quickly is just have a look at their results. The problem is fair way down in the, there we go. So revenue was up. The reason I'm doing this, I want to see, because revenue was up, but profit and EBITDA were down. So gross profit up. So why? Oh, by the way, a reported loss, but that's a reported loss. It's not a real loss. It's a reported loss because there would have been a one-off, like impairment of Brumby's Bakery intangible assets. They did mention they want to sell off Brumby's. I did see that. There was that impairment. Oh, there was other expenses gains, negative $20 million. If you exclude that, you get the profit, what I've mentioned, which was 13.3 million. So that's the real profit, 13.3, because there's two one-offs in that. I was trying to figure out why their profit was lower. Anyway, I can't see, but I'll be able to see when it comes to operating cash flow. Equity down, which is the negative sign. Equity from 208 million to 194 million. And let's have a look at the cash flow. It looks like the operating cash flow was lower. Well, no, it's higher. They said it was lower in their presentation. They said it was lower. They said operating cash flow decreased. Maybe they said something else. So virtually no change in operating cash flow, $18 million. Now, maybe their operating cash flow included leases. No, even that, it was higher. So actually, if you do include leases, their operating cash flow was about $8 million. It's not a lot. Their debt increased, and they were barely free cash flow positive. Barely. Now, their cash on hand did increase, but that's because of debt. Yeah, I don't like that. I do not like that. Okay, let's have a look chart for Retail Food Group. The market doesn't like it, and if the market doesn't like it, I don't like it because I can't think for myself when it comes to these sort of situations. Because again, I'm not the biggest fan of these sort of companies. Oh, and the chart looks pretty bad. Although it started to look interesting a few days ago. Maybe a little bit of a breakout on the 15th of August. Share price up 7.8% on that day, and it's gone in the opposite direction. And the share price, if it closes where it is now, it will be a long-term low. And let's have a look at the weekly chart. And of course, it was 2017 when all that crap happened with Retail Food Group. So share price, it was not $300. It was not $300. The company must have gone through a share reconsolidation because I can guarantee you the share price was not $300. I'm trying to think what it was. Maybe 30 at the most. Anyway, this was a capital killer for shareholders back in 2017. And still hasn't returned. And it hasn't even got close to returning. And yeah, the share price, if we get rid of the moving averages, the share price, the low was in COVID-19. That was $1.01. And the share price is near the lows. But maybe a bit of value. Okay, coming in number 2, we have the really bad ones. Step 1 Clothing. Share price down 25.55%. This is a really good case of technical analysis winning out. Okay, now, Step 1 did release a trading update on the 24th of July. So we actually knew the results beforehand. So this was not a surprise. The numbers were not a surprise. This is a case where it's not the numbers that send the share price down a significant amount. It's the outlook. It's the negative guidance from the company that sends the share price plummeting 25.5%. And yeah, for instance, I'll just show you the trading update. And the trading update tells you the results, but number for number. So let's have a look. So this one is the results, and this one is the numbers. So they're they said we had numbers or revenue of 86.9 million, and the numbers came in at 86.9 million. EBITDA, 17.4 million, and the numbers came in at 17.4 million. Now, they did say the profit would be $12.6 million. The profit came in at 12.7 million. So if anything, this was a slight beat when it comes to profit. So maybe the share price should go up because of the slight beat when it comes to profit. A little bit better than expected. But that's not the end of the story. It's the outlook that is really important. And this is when it's very important. So they do talk about a lot of stuff here, initiatives, roadmap, initiatives, financial impact and outlook. I actually did not even think about reading any of that. I just want to see the numbers. And they said financial year 26 EBITDA is expected to be in the range of 10 to 12 million. And I was like, okay, what was it this year? 10 to 12, and it was 17 million this year. Now they're expecting it to be between 10 and 12. That's not good. The market is not going to like this at all. I don't think they would have hinted at this in the past. So they're talking about all these financial impacts and outlooks. Obviously, pretty negative what they're doing. Now, maybe in the longer term, this will be positive. So maybe a long-term view could be helpful right here. Price realignment, redefined promotional approach, inventory optimization, brand investment, product development focus. Okay, so it's just that EBITDA forecast. EBITDA forecast, market doesn't like share price down 25%. Now, the share price was down even more. In fact, the low of the day was 38 cents. So on open, the share price was down probably almost 40%. 40%. Actually, we can work this out. 20, not quite. 30%. 35%, we'll say. So let's have a look chart for this for step one. And this is another case of, if we have a look, of where technical analysis, and we'll have a look at this, where technical analysis can be very beneficial because step one share price has been a downtrend for a long time. So I took a trading position in this company at 52.5 cents. So the share price right now is below where I took a trading position in this company back in 2020, 2 years ago. 2 years ago. And this was just a breakout on really good results. Or maybe it was something else. Yeah, it would have been results. So I took a position on the 24th of August, 2023, a trading position. Share price popped up on that day, and I took a position at 52.5 cents. This was after share price going sideways for a long time. And you can see a lot of cyclicality in this company. Share price down, going sideways up, going sideways down. And then I sold the majority of my position. I don't think I have any more holdings in step one. But then I sold most of my trading position in step one. You can see this really good rally in February of 2024. And then the share price fell and it really struggled after that. That was to me an indication that the rally in the share price has come to an end. And I didn't know which way the share price was going to go. And we can see sort of in a trading zone range for a while. And then the serious get out point was in February this year when they released results on the 19th. Share price dropped on that day by 29%. That was just get out. That was get out. If I was trading that, which I wouldn't have been because share price was in a downtrend beforehand, but this for me was a get out, and the share price has continued to drop since then. Now, we have seen a little bit of buying coming in today. So share price has responded, or the market has responded, unlike what we saw in February, because the low on that day was the close, or the close was the low. Today, the low would not be the close near the open, which could be a good sign. So maybe this is sort of the low. Maybe all the bad news has been priced in for step one. The other thing I should mention is I like their underwear. In fact, when I go hiking or running, I wear their underwear because it's really, really comfortable. The most comfortable hiking and running underwear in the world. Well, what I found anyway. Okay, so that's why step one clothing is down. Now on to the announcement I initially missed. James Hardie. How did I miss this one? Let's have a look. So if you go to announcements on CommSec, by the way, I've transitioned now from CommSec to Market Index. I've done that today. And the reason I did it today is one of the announcements in CommSec took about 3 minutes to open up. I then went to Market Index, opened up there, it took split second. Now, the problem with Market Index is there is a 20-minute delay. So all the announcements, you can see it grayed out. Oh, Universal Biosensors appointed as voluntary administrators. Oh, that's interesting. I'm not really. Oh no, so the first announcement today, so you can see what happens here. CommSec doesn't update the announcements. Sometimes it takes a while. There we go, it takes a while. And it all depends on how many announcements. So it just takes a while, blah, blah, blah. And I know what time I'm looking for this time of year, looking at just after 7:30. So what happened was I got to Fletcher Building, and that was the first announcement, and it was 7:30. And you couldn't see Luca or James Hardie. It had an update at that point. So I just assumed Fletcher Building was the first announcement of the day. So initially I missed James Hardie, which was the first announcement of the day, first price sensitive announcement. Now, a lot of times I will go to ASX announcements just to make sure that that announcement is the first, but I just saw it 7:30. Yeah, there's not going to be any other announcements released before that. It's 7:30. But I was wrong. And then I saw James Hardie share price down a lot. And I was like, ooh, what have I missed? No, first half results. And this was an absolute shocker. This was an absolute shocker. I wrote it down. Okay. So adjusted EBITDA, 226 million, below $30 million below consensus. That means it was a 12% miss, like a 12%. You can see how slow this is opening up in, what do you call it? Comsec. And if we go to James Hardie and open this up, I'll just show you how quick it opens up in Market Index. There it is, a little bit slower than this morning, but Comsec, it's still opening. Okay, so this was a shocker. So they also released guidance, and we'll go have a look at guidance. So their results were 12% below expectations and consensus. And here is their financial year 26 guidance. Total adjusted EBITDA, I wrote this down, 1.05 to 1.15 billion. Yes, that's what I wrote down. So adjusted EBITDA guidance, 1.05 to 1.15 billion, 21% below guidance. Yes, 21% below guidance. And so when that happens, it sort of makes sense, doesn't it? So all these brokers and investment houses, whatever you want to call them, they have their valuation models. And when the company comes out with this sort of below expectations, they have to rush to their computers and put in all the new numbers. And then the valuation model spits out a number, and it's probably 20 to 30% below what it was the day before. And hence you get this sort of reaction because it surprised the market. Share price of James Hardie down 30%? Is it 30%? No, it's 28.9% down. That's it, 28.9% down today. A little bit surprising, I will tell you this, because this company popped up on my radar last week as a possible shift in sentiment from slightly negative or maybe negative to positive. And I was thinking, well, maybe this could be a good trade. Maybe. So this is a daily chart. This is just based off the daily chart. Yeah, the computer is really, I think the internet is really slow right now. It is raining, so maybe everyone indoors here is on the streaming 4K or something. So this was the chart. So we had a moving average crossover. Share price on last Friday did get to like a 3-4 month high, actually 5-month high. I do like that. And I was thinking, oh, if the company's results are pretty good, this could be takeoff for James Hardie. But we've had the opposite. Share price plunging 30%. We'll say 30%. I've always grappled with James Hardie whether or not this company is high quality, probably erring on the side of caution, saying not quite for me in terms of high quality. I'll just have to, no. What's happened? It's not adjusting. I want to go to the weekly chart. It's not adjusting. It should adjust. I can't even get my adjustment thing up. There it goes. At auto. If you have a look at the weekly chart for James Hardie, over the very long term, it does show a few characteristics of a high quality company. But yeah, maybe. Well, since 2012 anyway, and when the share price does drop below the 200-week moving average, could be considered a good buying opportunity, but I'm not so sure. I'm not so sure with this one. This is a case where I'm just staying out. Okay, so that is the stock of the day. James Hardie, share price down 30%. Opportunity for those who like the company. Now, I'm just going to have a look at some charts of the day. I have 4 charts of the day, and I am trading 3 of these, but not 1. So I'll show you the company I'm not trading. This Tender Loving Care or the Lottery Corporation. I had a look at their results and I was like, meh. And then I had a look at the chart. I went, the chart actually did not look all that bad. There was a nice little breakout within the last few months. And the share price today has got to a long-term high, if not an all-time high. Let's have a look. Yes, an all-time high. So the share price, or the chart looks okay. I don't mind this chart. So maybe I should have a closer look at their results. Maybe. Anyway, share price up 8%. I thought the results on first look were not that great, but what do I know? What do I know? Anyway, Lottery Corporation looks pretty good. Next one on the list is Magellan Financial. So the next 3 I am trading, Magellan Financial. There was a really positive reaction from the market. Share price has pulled back a little bit, but the share price is still up from yesterday, but the chart looks okay. Chart looks okay. I would prefer not to have seen the sell-off. Next on the list is Southern Cross Electric and Engineering. Their results I thought were really good. We saw a 40% increase in revenue and profit. Obviously, the market was expecting that. Now, my only problem with Southern Cross Electric Engineering is how long the tailwinds behind this company will persist. I have no idea. They may persist for another year. But if they persist for another 5 to 10 years, this company is ridiculously cheap at these levels based off the growth. Now, we saw the share price pop up on open, and just like Magellan, we saw a little bit of selling, and right now the share price is down. So another company where we have seen a little bit of volatility today. And finally, APA Group, another one I'm trading. And whenever I'm trading these companies, I'm always interested just to see how the market reacts, because it could be the end of my trade. But this one was a good one. Share price up 3.66%. Had no problems with this one. I do think and still think this company is cheap. Now, the share price was in a long-term downtrend. And I think this could be the start of, well, maybe not start, but just after the start of maybe a new upward cycle in this company's share price. And the upside for APA Group could be, wouldn't say double from here, maybe 50% from here, or just a bit below 50%, which on top of their dividend could be quite nice. Dividend yield 6.78%. And the other thing I should mention with APA Group is they've increased their dividend for 21 years straight. Yes, they've increased their dividend 21 years straight. There you go. And that is all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day.